Good morning, everyone. I'm Ann Rossley. I'm with Harvey. We're with Baird Warner's Gold Coast office. We sell real estate in downtown Chicago, and we're here to talk real estate. Good morning. You have a good
morning.
weekend?
What a week! What a weekend! Well, folks, I spent a lot of time at the vet. So sick cats.
Oh, dear. But we're
Yeah,
on the mend, we hope.
we're on the mend. How was your
Excellent.
weekend with real estate, Anne? What happened for you?
Good. Had a few showings. It wasn't a wild weekend, but it was a good weekend. It was
I
really great.
I had
Today,
an
folks, you what?
I had an open house that nobody came to, but there weren't many open houses in the Gold Coast area, so I think people weren't even thinking about it.
No, I
It was
think
also
that's
a
right.
beautiful day. So
Right. Well, I was watching the Chicago Taste of Chicago out my window. I did not attend, but it was quite busy out there with the beautiful weather. So that was an interesting watch. And now I'm ready to hit it again on Monday morning. Folks, we're going to have a special guest this morning, CarolAnne.Bozarth from My Key Mortgage, and she'll be with us in a minute. First, we're going to talk stats. And I'm going to bring up my, oh dear, apologies, everybody. We're going to
there we
start
go.
we're going to start you off with the end here. Let's bring you back up.
Good.
There we go. Okay. We're going to fly through these fairly quickly, but the good news is today we have numbers through June. All right, talking first about condominiums. The median sales price for a condominium in Chicago today is $400,000. It's been trekking along for the last year or so. Excuse me. The number of condos for sale, 3618. And I drew a line. You can see the huge peak in condos for sale that was in September of 20, the height of the market right after COVID. But you can see the 3618 is pretty similar to the peak of each of the previous pre-pandemic years. And that's going to be the theme of our stats today, is we're going back to pre-pandemic. So I'm going to change this out. Okay, condos closed by month. 1,581 is down 13.3%. You can see that in June of 21, in terms of closings, that was the peak ever in downtown Chicago at 1823. June is the peak month for all of these years. So all these numbers here are the peaks. And you can see we're still at the highest other than last year. So very strong. Pending. This month, June, 997 pending. A little bit lower than the pre-pandemic levels, but certainly not a significant difference. And we had a couple of banner months, March of 21 and March of 22, where we had over 1,700 both months. Month supply, that is the number of months it'll take to sell out. Currently 3.2. That's down 25% versus the previous June. In September, when it was, height of COVID, 8 months worth of condos on the market for sale. And we've gotten over that for sure.
That seems low compared to other years. The month supply.
Let me go back.
I mean, we're at January levels for 2019.
Oh, exactly right. I mean, we still don't have enough inventory. It's very much a seller's market, 5.5 to 6 months being our benchmark.
Yeah.
And then here's sales volume year to date on condos, 3.9 billion in the lakefront communities. That's up almost a full percentage versus last year, which was up 88% versus the previous year. Yeah. All right. So now let's talk single family homes. Median sales price is $1,250,000, up 13% versus previous year, and up from 10 years ago when it was $737,000. In terms of number of single family homes for sale, now this is really down versus previous year's months. I think this is an interesting chart to look at, don't you think? Because it's
I do.
Yeah.
I do, but it's up over January.
Right, right.
which is good.
But here we are saying there's nothing for sale. There's nothing for
There's
sale.
no for sale.
Now, closed, again, we found sales. Look at this, 165 in June. Now, every month, June is the highest number of closings, except for the pandemic year where we peaked in August. But look, at 165, we're well ahead of 18 and 19 and very similar to 16 and 17.
Well, and again, those years had much more on the market than we do this year. So that's a reflection of what's out there is selling.
Yes, exactly right. Now here are the pendings, which is another lagging indicator, but a little bit closer to what's going on at this minute. 102 single families went under. So that's significantly lower than our highs from before. 220 in March of 21 being our highest high. But look at this. These are I wanted to see what happened in 16, 17, 18 in June. 105, 100, and 130.
Okay, so you're right. We're getting back to pre-pandemic.
Yep. And okay, month supply again, 2.3 months behind last year. It's low. In single family homes, we've tended to trend a little higher, but definitely lower. All right, sales volume year to date, because of the slower closings, we're not quite over last year's record year. But again, if you compare it even to 2020, I don't have the 2019, but would be well above that as well. So over $1 billion in single family home sales. And then I wanted to show you showings because that's a real sense of the buyer interest in getting in the marketplace. 3.8 showings per single family home in the month of June. But it's still, look how much higher it is. I didn't draw a line here, but you can see pretty dang strong on the showings. So that's it.
Interesting. So I've got a concerned seller, and so what I was trying to understand, why are we getting so seemingly few showings? We've had probably 7 or 8 showings since we went on the market in June. And what was
this a single family or a condo?
Excuse me, it's a condo in the Gold Coast. So Gold Coast has been slower than other areas. Lincoln Park's faster, Lakeview's faster. The Gold Coast has been slow. And when I talk about the Gold Coast, I'm talking about the competition for this condo, which is the area that is north of Oak Street to North Avenue, the lakefront to LaSalle. So picking up all this stuff. And I looked at properties in our price range, so between $400,000 and $500,000. And then I looked at the ones that were active. So I was the only one on the market only one that had a open house. But then I looked at their showing time. I went into the showing time thing for them, the application, to see how many showings they were none.
Yeah.
So it is, and I don't view that as, I view the reason for this as sort of twofold. One, I think people have been shocked by the rise in interest rates, and we're going to get to talk to CarolAnne.Bozarth just shortly, even though they're still very low if you look historically, but they are higher. And 2, it's summer again, finally. People are traveling, all these weddings, people are out of town. I think people aren't thinking, I have to deal with housing today. So those are the 2 things that are going on.
No, that makes good sense.
Yeah. Well, you folks know CarolAnne.Bozarth. We've had her on the show a number of times. There's CarolAnne. She is one of our star mortgage consultants at, I'm back here. Hello, well, there, I'm in the middle.
All right.
We'll just leave it. At Key Mortgage Services, a mortgage bank affiliated with Baird Warner, but also very independent, works with everybody. So CarolAnne, please fill us in on everything that's going on with mortgages.
Okay.
All right. Good morning, ladies. Love your stats.
morning.
Love to hear what's going on in the Chicago real estate market. It's always good to be up to date on that.
So yeah, we're curious to hear what's going on in your world of mortgages, and if you think we're like just at pre-pandemic levels, or what your situation is.
Yeah. Well, it's been an interesting time, right? I would say, since I've been on the show last, rates have probably almost doubled. I mean, it's been a while since I've been on with you guys. So, of course, you've got, buyers who started out when rates were in the 3s and now they're in the 6s. And that's, I think, what Kyle's talking about. That's, a bit shocking. And I think when you have, that much of an increase, because, I think one of the things that happened is that there was so many buyers, right? You had 10 offers on every condo. And so many people didn't get their houses and they were shopping and when it was in the 3s. And, those rates, we didn't go from 3 to 6. Okay. We crept up. But, a lot of people still haven't found their house because of the demand and the lack of inventory. And so I think it's those people that the rates have impacted the most. I would love to say, well, first of all, the rates have been a little bit of a roller coaster, and what I would call it's a volatile market. And we were rates were above 6. But again, last week I locked several people on condos under 6 at 5.625. So we do have, obviously the Fed and, everybody knows what's going on with the economy. And, I think our rates, they're going to be volatile. There's going to be times, where you're going to be able to catch the rate below 6, like I was able to last week. And I think that, nobody who knows really what's going to happen with rates. But I think as real estate agents, and, people out there listening right now, the most important thing is to not focus on the headlines, but to actually be educated, as real estate agents, to have a lender that you're working with, that you trust, that you can tell your clients, when your clients come to you and they say, you know what, Kyle, I know we've been looking, we've gone to see 40 condos, but I'm done. And you're thinking, oh my gosh, I put all this time, is this person just panicking? How can I help her? So the best way to help your clients is to have them sit down with a lender and have a mortgage consultation. It's not a pre-approval. This is a way to help educate them and help them understand how the rates are impacting them personally. Right? Because it's very easy for all of us to get caught up in hysteria, right? I mean, that's just a normal thing. We've got so much with social media and TikTok and all these things coming into our phone and feeding us. Rates are crazy high, and the market's going to crash, and values are overinflated. And I think our jobs as professionals is to help our clients understand how our environment is impacting them directly. So for you guys, it's like, your stats are awesome, right? You're helping your clients understand what's going on in the market. And for us lenders is to help our clients understand, what does a 5.5 interest rate versus a 6-point interest rate? What does that mean for them in a monthly payment? And just as an example, I'm going to give you, on a $500,000 purchase with 20% down, a 0.5% is $127 a month. Now, I recognize $127 a month is not nothing, okay? But if somebody's, is just saying, Kyle, I'm done, I don't want to look anymore, because they think that 6% means it's going to be $500 a month in their monthly payment, and they don't understand that it's 127, and maybe they can afford the 127, so they should keep looking. Yeah. But the fear of what's going on is what can potentially slow them down. So education, mortgage consultation, a lender who's going to spend the time going through the numbers and helping them. I think that the biggest the people who really should stay, people that should get off of the fence as far as should I buy or should I not buy, are the renters. Look what's going on with the rental market.
Yeah, they're through the roof.
They're through the roof. They're 25% increase in rent. There's not even enough rentals. I mean, the rental market is there's not enough, people are gobbling, first 5 applications for one rental unit.
Yeah.
And the people who rented a year ago, I mean, I have a friend who rented in South Loop, high rise, very nice building in January, and her rent's going to go up $1,000 a month.
Yeah.
$1,000. So those are the people that should, really, be thinking about, does it make sense to buy?
Can it go up $1,000 a month?
Absolutely.
I just rented one at the Heritage, a 1-bedroom, and it went, my client was leasing it out for $2,000 a month, and we were able to get 3 applications for $2,500 a month.
Yeah.
Yeah.
Now, I don't know if they can raise her rent $1,000, but her same unit.
Yeah. Yeah. Oh, yeah. Fresh one. One that's empty. Absolutely. Wow.
Yeah. So I feel like that, the way that the rents have been going, those are prospects, right? Those people in those situations really should be educated, really need to be educated. Maybe this is the time, you can put, some people can put, as little as 3% down and 5% down and helping those people understand that this is a great time to buy. Even if rates stay at 6%, 6% interest rate versus a 25% increase in a rental is, it would be so easy for me to sit down. I could spend 10 minutes with a client going through what their rent is, what the increase is going to be. Let's look at like what a mortgage payment would be. And not to mention, you're paying your own mortgage, not your landlord's. You're investing in yourself, all the good things about, buying real estate, becoming a homeowner, and the benefits to that are obvious, right?
Right.
So 2 key things: education, mortgage consultation, which I'm happy to do. I know Key Mortgage, anybody within Key Mortgage, this is something that we provide for our agent partners. And I can't tell you how much great feedback I get from my agent partners, because I'm here as a, service to my agent partners and to help their clients. And if I talk to 10 people and only 5 people end up buying, it's okay. Maybe those other 5 people will buy next year.
Well, you have relationships for life, just like we do. Like, we don't just meet with somebody and talk about the value of their home at the moment they want to sell. We talk about that whenever they want to review their portfolio for insurance purposes, to maybe, change assets within, trusts.
Right.
So it's the same thing with mortgage. People need to stay on top of, what's happening, make decisions based on changing rates, right?
Right. And the other thing too is working with a lender who's going to evaluate all the different products out there. So, we lived in the 30-year fixed, right? Nobody was even looking at ARMs, and ARMs are back. Adjustable rates are back. And for some people, they really make sense. I've been logging lots of clients in ARMs. And adjustable rates are great for people who are, going to stay downtown for maybe 5 years, maybe 10 at the most. So we've got, the 7-year ARM, which was pricing really well last week. I locked several people in a 7-year ARM. 3-4 weeks ago, the 10-year ARM was pricing really nice. So again, looking at all the different products that are out there, don't just get stuck on what the 30-year fix is. Just looking at all your different options. And another thing too about rate, I saw a great quote about rate, and this is also really important, because when you're purchasing a home, you're thinking about like, oh, I'm going to live in this home for a really long time, or however long. And this quote that I saw was, you date your rate and you marry your home, which is so great, because I say this to people all the time, that you're not stuck with your rate.
Right.
And, when these rates go down in a year or 2 or whatever, when our country gets a little bit back in line, you refinance. And
Talk about that a minute, Carol Ann.
Mm-hmm.
Talk about refinancing, because if somebody has not gone through that process, they
Mhm.
might think they have to dig a lot of money out of their pocket to make that happen.
Right,
So
right.
can you just talk just briefly about?
Yep. Yep. And it's funny because, some people are like, think of this, the refi suggestion as a sales pitch. And, I'm the least salesy person in the world. You both know that. And so it's not, it's a true value. And, it's a value because to do a refinance, it's about $1,800. So it's not free. And I always tell people this, it's not free. But it's very easy to tell a client when it makes sense to refinance because based on the drop in the rate, it's easy to show how much they're going to save each month and how long it's going to take to recoup the $1,800 that they have to pay. So they don't have to come up with any down payment. It's basically just the refinance, the processing and underwriting fee. It's starting a new loan. And so it's there's a cost to it, but let's just say it's you're going to save $100 a month. Well, if you're going to live there for more than 18 months, it's going to be worth it. Mm-hmm. So it's very easy to tell a client when it makes sense to refinance. And so that's also like I've had a lot of people, clients lately coming to me and, everybody's online, everybody's trying to do their own research and look up rates. And so they're coming to me with, little tidbits of, and you guys understand what that's like when, obviously with all the online real estate stuff. Oh, can I have a rate with points? Can you tell me what my rate would be with points, with discount points? And which I love because, typically you don't want to pay points, but sometimes it does make sense. And this is another thing, whenever I'm looking at, locking a client, I look at what the next lower rate is and what would the cost be to go to that rate. And that's what a discount point is. But if you're going to spend, let's say it's $2,000 to go from 6% to 5.875. And this person is just fixated on being under 6%, which some clients are. And I say, you're going to spend $2,000 to go 1/8 lower, which is going to save you, let's just throw out a number, $30. Right. You could save your $2,000. When the rate drops 0.5% or a whole percent, use that $2,000 to do your refi.
Right.
So don't spend the money up front to get a little tiny break on your rate when you can use that money. And that's how I introduce the refinance and how that makes sense. But like I said, the quote, you date your rate, you marry your home. Find your home, look at your situation, what makes sense. You're working with a trusted agent, hopefully, and then you find a trusted lender and it all comes together.
Well, wouldn't you say too, CarolAnne, that what really matters is the payment? Doesn't matter what the rate is. It matters what the payment is. And when you speak to buyers, I mean, that's really the conversation, right? It's not how much you buy. It's
right. I love clients that come, well, how much will I qualify for? And I always say, well, how much do you want your monthly payment to be? Because you'll probably qualify for more than what you want to spend. So I take that number. I say to my clients, give me your ceiling. You don't want to spend $1 over 3,500, let's just say. And I take that 3,500 number and I work backwards and I help them understand all the different components, right? You've got your principal and interest, you've got your real estate taxes, you've got your homeowner's insurance, you've got your potential HOAs if you're in a condo. And if you're putting down less than 20%, you've got your mortgage insurance. So you have potentially 5 things that add up to your $3,500. And I try to help them understand what, by using today's interest rate, what the principal and interest is, and then estimating the other 3 things and let them know how much they have left over for taxes and HOAs. And that's a very simple equation. And because, yes, you're right, Anne, the most important number is what do you want your monthly payment to be? And that's where obviously the interest rate, comes into play.
Right.
But again, crunching those numbers, what does it really mean for you in your particular story? And let's lose the headlines. Let's remember that 6%, although it's higher than 3%, it's still a great rate. And You're not married to it. As long as you live in your home, you don't have to have that same rate.
One last quick question.
Yeah.
And Kyle may have another, but you mentioned before you've got some 3%. I mean, no, people don't have to put 20% down. They also have other ways of coming up with down payment, correct? Whether it's IRA or some other.
Oh yeah, a great. Yep. Most people's 401k will let them take a loan to themselves and not pay the, penalty. Like you're not taking a withdrawal, like you can take a loan. Now, again, I always advise people, you have to check with your 401k, make sure that this is available. But that's a great way for people to, get some extra money for a down payment. And then they just pay themselves back.
Right.
Yeah.
So one of the things that a number of buyers have experienced in the past year is losing out to all cash buyers. Talk about a little bit about what you do to help sellers and their agents understand that this is a good, solid offer. These people are going to get financing. You're not going to lose them on financing.
Yes, that is so frustrating to me. And I know it's hard. It's hard for sellers and agents to, not think that a cash offer is the best. But as you know, it's not always the best offer. And so I always reach out on behalf of my clients to the listing agent, and I talk about, the strengths of the client, the fact that, there's no red flags. This is a slam dunk deal. This is going to get done. This might as well be cash. And I only say that because I do so much homework on the front end. I run it through the automated underwriting system. And I know that there's, that the loan's going to close. And so I will reach out to the listing agent and I will, try to, as much as I can, persuade them that this is as solid as a cash offer.
So don't be afraid to get into the market just because you're going to lose to all these cash offers. What I'm finding also is a bunch of cash offers make the offer in cash, but they're getting financing. So They are sort of the same. They can still weasel out for other reasons if they want to or try to.
Right.
You're absolutely right. It's nice to have you advocate for your buyers to help them through this.
Oh yes. Yeah. And listing agents love to, they love the fact that I call them. They don't have to track me down for one, but they also love the extra, input. And I've had many clients win, in this competitive market over the last year. And the listing agent actually telling my agent partner, gosh, that your lender called and it was like one of the things that really made my seller feel comfortable with this offer. So yeah. All the little extra things that you have to do sometimes in these times.
Well, thank you so much, CarolAnne.Bozarth. How
You're
can
welcome.
The people watching get in contact with you?
CarolAnne.Bozarth, Key Mortgage. And like Ann said, we are part of Baird Warner, but we work with any outside agents, any clients. And my cell is 312-286-5824. Google me. You can find me there. And happy to have any mortgage questions, mortgage consultation. It's one of my specialties.
Terrific.
We'll have you back.
Definitely
again.
Have you back. Thank you so much. And we will put your contact information in the comments on our social media and YouTube, so people will see it there.
All right.
Thank you so much, CarolAnne. Everybody, thanks for watching. Have a great week, and we'll see you next week on Monday Morning Coffee with Kyle and Dan.